Good afternoon, everybody. Welcome to your Wednesday edition of the TraderMerlin Show. My name is Merlin Rothfeld. It is the 26th of June today, getting near the tail end of the month. Of course, we've got earnings season coming up here in a couple of weeks, and really quiet until then with regards to the numbers. But there's a lot of market activity that goes on between kind of the tail end of earnings season and when earnings season actually kicks off. And I thought it'd be fun to have an old friend back on the program today to talk about window dressing and earnings. And of course, we'll talk about contract rollover. We'll talk about summer trading, all kinds of good stuff today. The picture there almost does look like a young Al Pacino for the day. Nope, that's AI's version of Jeff Manson, who's joining us. Jeff, how you doing, my friend?
Hey, I'm doing great. Thanks for having me, Merlin.
Always a pleasure. Always a pleasure. You staying? What are you, like 100 plus degrees down there today?
At least 111 right now. So.
Oh man. Well, I think I'm at like 75. So if you need a break and come visit, go ahead. I got a studio over here for you to work in. So.
Yeah, get over to the beach.
Yeah, I am. Yeah, but you've got a pool. I don't have a pool, so we've got that. Let's talk about what I would just kind of introed with, which is, there's obviously this 4 times a year we get the earnings season. Ours doesn't start for another 2 weeks, but there are certainly shenanigans and things that institutions will do and companies will do to kind of doll themselves up for the party, if you will. So talk to us about your thoughts on window dressing and kind of earnings season and what you think about it.
Well, first thing is to understand a little bit more about window dressing and, how the, what do you call them? The fund managers out there, the mutual funds that have stocks as part of that. You have to keep in mind that what we've just seen with the tech run this last quarter is that there's a lot of high flying stocks, NVIDIA, Apple, the big 8 that go along with on the NASDAQ. And if they're holding any of those stocks in their mutual fund, they cannot hold more than 5% of that, or that stock cannot be more than 5% of the value of the fund. So they have to reduce that size. So every quarter that we start to approach the window dressing, which is the last week of the quarter, they kind of trim things up. And I think they're getting ready to do a big trim tomorrow, kind of a big haircut, so to speak, where they make the drop, and then we probably will recover into next week. And but that the window dressing that happens, you had to take a look back and say, okay, well, what stocks are like pegged out to the upside, or what industry or what sector are they in? And then you start looking at, well, which ones do they have to trim down? And that's what's starting to happen this week. But we have been, last couple of days, been really choppy. Great trading when the banks and institutions are there and completing their order flow. But later on in the day, in the midday, the dollar going in a tight range until like right at the last minute today. We got, I think that's more in preparation for what economic reports are coming out tomorrow as well.
Jeff, I'm trying to figure out, I'm not sure whether it's my internet or yours. I'm actually doing a test right now. It seems like things are all of a sudden freezing up over. So let me just turn off your video just for a sec. I have a picture I can run for you just and see if that slows down. But I have a feeling it's my internet over here that is causing problems right now. So I'm checking. I'm doing a little test here just to make sure. Are you still there?
Okay.
Okay, cool. Yeah, something was spinning. So something is... Yeah, no, we're going to do a little speed test here just to check. I turned off Jeff's video, and I'm not sure if that's the cause, but I'm checking my internet here. Oh, yeah. I'm not looking so... There, it's just speeding up now. Okay, for some reason, something shut down here in my neighborhood because it is much better now. So we'll just keep the video off. I've got a beautiful picture of you, and a nice... looking really good. All right, so...
Look skinnier?
Yeah, I can hear you now. So let's go back through that a little bit. So talk about the window dressing. Obviously, they are trying to tailor things. Obviously, there's things that fund managers can and cannot do with their books. And it's not that they can't be over 5% from my understanding. It's just they don't want to be over allocated in one, too heavily allocated in one. But, it's also selling the winners and selling some of those losers as well. So it's kind of rebalancing the portfolio, but also, when they go into earnings season, they don't want to be caught holding the dog that's down 30, 40, 50%. They kind of get that one off the books, right?
Well, sometimes they're restricted and they have to hold it because of how they allocated that mutual fund. I mean, that's, they're selling a mutual fund that has specific parameters within it, and they have to bring it back in compliance while they report to the their taxes and the end of the quarter type synopsis that they do.
Mm-hmm.
They can't go outside those boundaries or they get penalized. So it's not like they're cutting a stock out completely. They have to downsize the ones that have got too big, and they kind of sprinkle that revenue on the ones that didn't do so great, kind of keep that mutual fund at their targeted range as far as the growth and things like that are happening.
Man, we were having all kinds of, that was me. So let me repeat that. If you look at this OMIC, it says Singular Genomics Systems. And with Singular Genomics Systems, it's up 2,800% for the past 1 month. Now, with 1 month of activity here, if a hedge fund held that, that could significantly skew the weightings in their portfolio over to in that position. They'd have to sell some of it. Sorry about that one. I had to, my microphone was off for a second, so there we go. So in that case, it's exactly what you're saying, that when something is that heavily overweighted, if it is something that's skyrocketed, and I'll bring up the chart of OMIC here for the viewers out at home. Here's OMIC. You've got something, well, it says for the month, this thing was up 2,800%. It doesn't look that way. OMIC seems to be having a great day, but not a month. So that scanner that I looked at there clearly is wrong. You see, it says 2,800% here. But anyway, I'm trying to come up with a visual example of what you're discussing there.
Yeah, a company like NVIDIA, a company like Apple, Microsoft, some of the big techs that have been like CRM, those have been big movers. And a lot of those, especially like the NASDAQ 100 or the Dow 30 stocks, they tend to be more involved in several different mutual funds. Okay, and we are talking about those type of funds, the mutual funds, exchange traded funds, things like that have to balance out. So they start to shave off some of their shares. We even seen a lot of the CEOs of companies, a lot of them were selling, but that of course, when they were selling and downsizing, that could be for multiple reasons, of course. But during that time, you might see that they'll try to come out and play some of those shenanigans you were talking about by giving an earnings warning.
Mm-hmm.
And they'll say, "Oh, well, we're not doing so hot. And then there potentially could be a drop in price just to kind of get them under that, so they don't have to sell off the stocks. But in the case where things just keep peaking out and you're at market all-time highs, they do have to sell off some of that to balance out and become in compliance."
Is there a window of time for that? For example, we know that really the earnings season kickoff is not this coming Friday, or 2 weeks out on Friday is when we get the banks really start things off with JP Morgan and Wells Fargo. Is there is it typically the week before that or 2 weeks before that? When do you see that kind of window dressing come into play?
You see it more relevant in the last week of the quarter. Okay. It can start a little bit earlier, but last week and the week before, we were at all-time highs again on the NASDAQ. God, it feels like 1999 again, doesn't it?
It does, it really does.
We know how to play that one. Just wait for March and we get the big sell-off.
Let's see if it happens.
But we're not seeing the internet boom this time. We're seeing a AI boom.
Right.
So, but by the last trade day of the quarter, all their books have to be within compliance, or those mutual funds, they face fines and penalties.
So, question here from Naomi says, so what do they do with that money, that they sell off? So, if I'm a hedge fund and I'm clearing my plate, if you will, and knowing I may run into some regulatory problems because I have such exposure to a specific market segment or a specific stock, I sell out of some of that, and then I've got this cash. Do I reallocate that immediately into one of my other holdings to kind of balance things out, or do I hold on to that to buy back in at a cheaper price?
No, they have to always be invested. So you're going to have to see that, or you will see that they'll start sprinkling it into the ones that are not performing as well, kind of like a cost average.
Right.
We're trading the fund, not the individual stocks within the fund. So the whole fund is looking for, I mean, they're trying to raise the whole fund, everything that's in the fund, okay? All the stocks and things like that. So if they have to trim off some of the bigger players, they sprinkle them on to the smaller ones, or the ones that are not outperforming.
Yeah, as a couple people said, reallocate or rebalance that portfolio and it's kind of similar to, if you think about the guidelines that most financial educators will give you, it's look, once a year, at the end of the year, you should go back through and rebalance your portfolio. And again, that's a risk management tool, which says let's lock in some profits on the bigger gainers and reallocate to those ones that have underperformed because at some point they'll come back. That's kind of the investment philosophy of it. And most people say do it once a year. Here, these funds are doing it quarterly, mainly because they've got to report their holdings to regulators, et cetera. So here's what we've got, and don't want to be, skirting the limits of I'm too exposed to one area and then maybe face some penalties from it. So this kind of rebalancing happens quarterly.
Correct. Yes.
Does it ever? You're a pattern guy. It's one thing I love about you, Jeff. Is I'm a pattern guy, but I think you make me look silly when it comes to patterns. You know a lot more about all these cycles and numbers and patterns. When it comes to window dressing and earnings, have you spotted any patterns? Is there specific sectors that typically perform better or worse, or is it just kind of random depending on current market conditions?
Well, the patterns that I'm looking for, and I'm mainly referring to like the Dow 30 and the NASDAQ 100 stocks, is just you start flipping through them and you notice that there is probably about, and we're talking maybe 130 stocks, so that's just Dow 30 and NASDAQ 100. I know there are some overlaps, so let's just say 100 stocks, okay? If you go through that whole list of 100 stocks, you might find that about 20 of them are just pegged out to the upside for the last quarter, okay?
Mm-hmm.
And because they're the large market cap stocks like that, you would have to start anticipating that they would have to trim those out, especially if you saw a 10, 15, 20, or even greater percentage increase on that stock over the last quarter. I mean, look what NVIDIA's done. Look what CRM's done. Even Chipotle,
Yeah.
I mean, Chipotle, 50-1 split. Oh my gosh.
Hey, I'll take it. Just give me a free burrito every now and again, and I'm happy.
But yeah, the patterns that I'm looking for are the ones that are really going into the stratosphere, and those are the ones that I would anticipate that they have to trim up. Okay. Now, of course, I'm looking for my entries, and a lot of these are being tough to call to short them. Okay. Simply because they're at all-time highs. I mean, we just saw Microsoft the other day get an all-time high, and of course, some of these other ones there's no supply zones up there, at least ones that we can correlate to making a trade. Although the pullbacks that we've seen over the last couple of weeks with like NVIDIA and things, they're almost running up to do that double top, and looking for those patterns, you will start to see that there has to be, well, topping patterns is what I'm looking for. But you want a topping pattern that's on a reasonable time frame. And I'm going to kind of take a stretch out because I'm shorter term trader, not longer term. You want to see a topping pattern that's starting to be created like a 120-minute chart to a 60-minute chart to have any type of follow through.
Do you have any current examples I can bring up?
Let's bring up NVIDIA.
Okay. I've got NVIDIA up here on the 2-hour chart.
Okay.
If that works for you.
Yeah, and you can see the drop that recently occurred on NVIDIA as it pulled back, and now it's starting to come back up into that upper range. Now, NVIDIA could continue higher, okay, but there's a lot of cracks in NVIDIA. They don't need the money that it is worth right now, but they don't pay out a dividend yet. It's still kind of a growth-oriented company. So
NVIDIA does pay. I'm seeing dividend payments on here, which is weird, but it's like 1 cent, 4 cents. So it's something. So I don't know what that is. If that's just a glitch, but
yeah, let me check that out real quick. Yeah, it does. Wow, that's.
Yeah, I wasn't aware of dividend on it either, but I mean, it's almost insignificant. The previous one they paid in June was 1 cent. So don't spend it all in one place.
Exactly. Wow, that is interesting.
Yeah.
I'll have to check that out. But most people view NVIDIA right now as a growth-oriented stock. In the way that I kind of draw the line in the sand, if it pays out a dividend, it's more of a value-related more than a growth. A lot of the growth-oriented companies that are on the NASDAQ right now that do not pay a dividend, those might get the bigger haircut over the ones that do. Okay. The pattern that I'm looking for is after that recent drop, that did create a level of supply. Okay. A picture on the price chart where there might be some leftover sell orders. If nothing else, it was a big drop after this one did a 10-to-1 stock split?
Yes.
Okay. So as price gets back up to that 135, 140 area, people are going to start remembering the drop, and they're going to want to potentially take some, either get out back at the high, and some of the people that got in just before the stock split and buying at the high, maybe wanting to just get out at break even. But with this particular price pattern, looking at the 2-hour chart, looking at the 60-minute chart for that picture of a supply zone, that's what I'm looking for as far as them starting to downsize those particular stocks.
Okay. Yeah, real quick, the question came in was, is the dividend adjusted? Yes. It's typically a percentage, Margaret. So if they're paying a 1% dividend and obviously there's a stock split, it's going to adjust accordingly per the number of shares out there. So, Big F says, if you're buying NVIDIA for the dividend, you need to go back to school. I agree. It's not about the dividend on that one. It's certainly more about the potential growth. And I agree with Jeff. I think that I mentioned that a company has a couple different things they can do with their money. If it's a high growth, needing infrastructure, needing plants and facilities and just growth materials, all those earnings are going to be reinvested in the company to establish the high growth. Now, once you become an established company and you no longer need to build, equipment and machinery and infrastructure and buy buildings, then you have to find a way to encourage people to continue to buy your stock. That's the way I look at it. And that way is give dividends. So why are people buying NVIDIA? It's because people look at what they're doing and going, they're the only dog in town that's doing this. They're revolutionizing the entire chip making and computer industry. They're probably going to be the fulcrum for the entire AI industry for the world. There's growth potential there, and yes, I'll pay an elevated PE ratio for something like NVIDIA. Whereas I look at a General Motors, it's like probably not going to be going anywhere. They'll be fairly stable, not too volatile. Hey, we need people to buy our shares. Let's take whatever earnings we do have and pay that out as a dividend to entice you to buy into it for longer-term investors. And that's that growth versus value investing. And I would prefer value investing myself, but growth investing myself because I like the tech side of things. But anyway, I want to further elaborate on your talk about dividends being paid.
Yeah, NVIDIA does have some very creative bookkeeping.
Don't they all? Doesn't every company have creative bookkeeping? I don't trust it. Ever since WorldCom and Enron, I'm like, I don't trust books, period.
And you did put, you said it, but Enron and NVIDIA have very similar accounting practices.
Uh-oh. They do? I'm not an accountant, so I have no clue.
Well, I'm not an accountant either, but the way that they sell their products and move things around, just be real careful.
All right. All right. So earnings from a futures perspective, typically, I know you're a futures guy. Do you dabble on earnings play? So as we roll into this upcoming a couple weeks out here, we're going to have earnings season start, and you have I believe on July 12th we've got J.P. Morgan, we've got Citigroup, BlackRock. Are you an earnings player? Do you play the actual earnings? Or are you looking more for its impact on the S&P future index?
Well, I'm looking at, of course, on the future side of it, I'm looking at how that stock is going to affect the equity index. Okay. Especially like with big companies like Nvidia and Amazon, Apple,
Microsoft
coming out with earnings. They do impact the NASDAQ futures and the S&P futures pretty radically after hours. So being prepared when those earnings come out and prepared for the window dressing, like I just mentioned earlier, that I'm anticipating a pullback tomorrow with some of the economic news that's coming out, because we're getting really close to having many 2 quarters of negative GDP growth. So there's going to be a play. There's going to be that recession word that keeps getting flashed around. And if they get their confirmation of a recession, then that's going to cause that volatility that we're looking for. But as far as using the stocks, you have to be paying attention to what these Dow 30 and NASDAQ 100 are doing, because they do impact how you trade the equity index futures. Okay. Whether you have, like yesterday, we had Home Depot pulling the Dow 30 straight down. I mean, Home Depot did over a 5% drop, or just about a 5% drop yesterday. And it was until Home Depot found the bottom and started coming up, that's when the Dow started to turn as well. So we're always monitoring what the Dow 30 stocks are, NASDAQ 100, especially, well, on the NASDAQ 100, let me clarify. I only use 8 stocks on the NASDAQ for looking for those momentum plays: Apple, Google, Nvidia, Meta, Tesla, Amazon, Netflix, and Microsoft. Because these 8 stocks control about 47% of what the NASDAQ futures do. So in the morning when I'm watching these big players, are they all going in the same direction? Or is 4 gapping up, 4 gapping down? You learn to use the large market cap weighted stocks as an odds enhancer to how to anticipate trading the equity indexes. And volume this morning, I'm just making a quick reference to this. Volume this morning was really, really light, and I use the Dow 30 stocks as kind of that benchmark. But the Dow 30 stocks were trading very, very light volume, even into a half hour after the session opened. That light volume invites that whipsaw and volatility. So in our live trading room, we were saying, hey, let's look someplace else other than the equity indexes, until they kind of settle out. So we went over and looked at crude oil, watched natural gas, and some of the other ones that were having the last trade date going on, like copper and silver. Their last trade date was today. And we use all of that information to anticipate when there's going to be a lot of buying activity coming in or selling.
Yeah. And that was one of my other questions for you was, does it concern you when you look at something like, the NASDAQ or S&P, those indexes are clearly skewed and overly weighted for Apple, Microsoft, Nvidia, Tesla. I mean, not Tesla as much, but, like today, Micron came out with earnings, and their earnings they had good earnings, but were down over 5%. And you're like, oh, well, this may have an impact on, let's say, the NASDAQ. Well, No, actually, it's 1% of the Nasdaq 100, so it's really not that big of an impression. Maybe that would impact something like semiconductors or chip makers. So, just kind of curious how you kind of filter through that. But you said it, kind of those top 8 are the ones you're really looking for, which kind of limits your days. You look at those companies you mentioned, Amazon, Microsoft, Meta, et cetera. All those companies are going to report probably within like a 3-week period, and most of the time they're on the same days.
And that's when we play those, and when we trade in the equity indexes, when those companies are coming out to announce earnings, you have to, you're going to get some pretty big swings in price. Now, when you start to watch for this, you noted that the banks and institutions are going to hedge themselves on the equity indexes. Mm-hmm. They're going to have orders weighting way low. They're going to have orders weighting way high. Okay. And you got to find that picture on the price chart where they have the unfilled orders. Now, for the last couple of quarters, you can go back and say, okay, when Apple announced earnings, how much did the Apple stock move up or down, just as far as that whipsaw to trigger the shorts or trigger the longs? Where did they find that large stack of unfilled orders? And it's not close to current price. It's pretty sizable away. So you do have to go out to some larger time frames, like CRM. That stock. Let me bring that up. I'm just going to look at CRM one more time. When they came out with earnings, which was roughly about the May 29.
Yep.
Okay. That was a huge gap down. Okay. Now that gap went right into a demand area. In fact, I'm still holding my 100 shares that I bought down there, and I got a fill at 212.59. Okay. A little bit above that, about 212.80 and change. But the understanding where demand is at, these guys are not going to be really close. When the market shoots up or shoots down like this, they're waiting and they're salivating for that price to come down to that picture on the price chart where they're willing buyers. So with that top 8, those 8 stocks that we talked about on the NASDAQ 100, those are some of the largest market cap weighted stocks on that index. And the large market cap stocks, since the NASDAQ is a market cap weighted index, those market cap stocks move that index more than the smaller market cap. Just like you said, MU came out, it's probably not going to have a very big impact on how the index trades because of its market cap is quite small. Compared to the other ones.
Right. Yeah, and I love earnings plays like you talked about with CRM. Actually, I sold puts on CRM. I sold the 200s, and I didn't get it, but I collected some pretty nice premium on it. One, and they expired worthless. But the reason I brought that up is I like to look at the individual securities and do options on those. That's fine, but knowing that Salesforce is probably a bit more impactful than Kohl's. So I had Kohl's was another one that came out with horrible earnings and just plummeted significantly. It's been bouncing ever since. Kohl's probably not going to impact the market too much. It's really not that big of a deal, whereas Salesforce could be more impactful. If you're ever curious, guys, this is a great resource. I love this one. It's if you go to slickcharts.com, I'll copy the link and put it into your chat for you guys. So there you go. This has the NASDAQ 100 and the S&P. It doesn't do I guess it doesn't do the Dow. Yeah, it does do the Dow as well. So all 3 of these, you just click on them, it'll tell you what the different weightings are. So as Jeff was talking about Home Depot, Home Depot is 5.68% of the Dow. Now, that certainly is a good percentage, but remember, there's only 30 components in the Dow. So when you look at something like the S&P, click on companies, and I'll see if I can find, let's go Control F and see if I can find Home. Home Depot is number 21 on the list, is less than 1%. It's 0.73% of the S&P 500. So, if Home Depot has a huge gap down, it could really impact the Dow, not the S&P so much, and it's not in the NASDAQ, so that's not going to be a factor there at all. So just knowing the environment to where these stocks come out when they report earnings could certainly have an impact on the indexes, aside from just their individual stock play.
The other thing that I would like to impress out here is that when a stock gaps down or when these earnings come out and they cause this big volatility, this is the most opportunistic time to study supply and demand.
Yep.
The picture on the left-hand side of the chart where price stops going down or price stops going up, you've got to study those pictures over there on the left-hand side and look for all those little details. If I remember right, you've got to have a resistance or a support area where price breaks that so that you have a picture of an accumulation of orders, whether it's an accumulation of sell orders or an accumulation of buy orders. Now, a lot of us refer to those as reversal patterns. Okay. Well, a reversal pattern has to be created before price breaks above the resistance or breaks below a support. Now that's your location, okay, of when that accumulation of orders becomes active. Okay. Now, when price returns to that area, and of course you have that picture of what you're looking for, but when these markets react the way they do, they only move to where the orders are at.
Right.
And you have to study that picture on the price chart. Now, a lot of us have been in the markets well, many of you have been in the market for a long time. So you already automatically know where to look for the evidence. And it takes a little bit of studying to find, and the way I teach my students and work with them, I said, find a trade you desire to get. And you look at these big, long moves up and you go, man, I wish I would have bought right at the low. Okay. But then if you wanted to buy at the low, you still have to look left to find the accumulation of orders that made that entry for the trade you desired to work.
Right.
And the left-hand side of the chart is such a tremendous teaching tool that students should spend a lot of time finding what they want to create in a trade versus what they don't want to create in a trade. And the left-hand side of the chart has so much evidence and picture perfect past trades that have already happened are such great learning tools.
On that note, let me ask you a question. This one came through a couple days ago, and I actually did a session on this. I had a viewer, I believe her name was Pepper, who was kind of working with multiple styles. She says, for my longer term accounts, I'm a trend trader and I do real well there, but I also have a reversal type account. And I talked about kind of different styles and strategies. So your style of trading, I get. You're a shorter term guy, maybe day to swing trader, right? Taking trades that may last a couple days, a couple weeks, but you're not a 6 month, year out type of trader. The other side would be what strategies do you employ? Because it sounds to me like I'm hearing you're certainly a pattern guy. So I would say you argue that you're using supply and demand, support and resistance, whatever you want to call it, as the basis. So looking at the left-hand side of the chart. But what other kind of strategies, you don't have to spell them out as far as here's everything I do, but broadly, what type of strategies are you implementing for your trading?
Well, like you said, I look at the patterns. Now, with CRM, I found the pattern I was looking for. The demand zone that I identified at 212 to 204 was formed on November 7th of 2023. So when you're looking over on the left-hand side of the chart, you'll see that there's kind of a W shape, a double bottom right there. And then there was a resistance area and price gapped out of that resistance. Well, when gaps are the origin of the greatest imbalance, okay? Now, if I'm looking at this and getting my picture of the trade I desire, okay, on a daily chart, then that would go towards a longer term strategy. Now, I primarily trade shorter time frames because I'm really a student of the market all the time. And we even get down into tick charts and watching how they play out. It's the same picture over and over again when it comes to demand zones and supply zones. Because there's certain characteristics that have to happen in order for there to be the right picture of unfilled leftover orders. It's a lot more than rally-based rally or drop-based drop or the other ones, okay? That picture on the left-hand side of the chart has multiple other factors around it that you can use as odds enhancers.
Right.
For example, support and resistance. I use that a lot, but I qualify support and resistance by a minimum of 3 touches of resistance or support. So as far as my trading plan, I have an exact picture when I'm going to execute on a trade. The information outside the price chart, of course, also impacts the longevity of a trade. Earnings season, contract rollovers, so on and so forth. So for me, it's a specific picture, and it's the same picture whether I'm trading a small time frame for intraday trading or even active income type trading, and whether I'm trading long term, it's the same picture.
All right, cool. One other one. I did a poll yesterday for my audience. There's a specific trader that everybody knows I despise and I can't stand. I think he's a POS, but yeah, he's a real piece of work. And he talked about volume. So I'm curious what your take. How important is it to look for volume on the instruments and markets that you trade, and what does it tell you or not tell you?
When it comes to futures trading, knowing when the zone was created and whether the zone was created on increasing volume or decreasing. Now, I'm not talking about volume after the trade has already started. We're talking about volume when the zone was created. Okay, and also location of where the zone is important. But I look at volume, and when you're trading stocks, you will find that right around the 120 to 60-minute time frame, when you find your zone, you will note that when the zone is being created, okay, because what we're trading is the retest of the zone. If there was increasing volume when the zone was created, also note the time the zone was created. With stocks, they often return to the zone the same time the zone was created. So if you have a rally-based drop picture on a price chart, and you have that in the right location, coordinate that area. I think you still highlight it with a yellow box or something like that. Note when the zone was created, what time it was created, and whether the zone was created on increasing or decreasing volume. And you will have some additional odds enhancers when price returns to that area. So when I'm using volume, I'm not looking at volume when the price is reaching the zone. I'm using volume when the zone was created.
Got it. So you would say volume is important.
It's an odds enhancer. It's not my go-to decision. I'm again, pictures and patterns on the chart where we might have leftover orders. Volume is not the one thing that I use. It's many things.
Yeah. Well, I would make the argument, Jeff, that there isn't a one thing for anybody. You know, I think
That's correct.
If you use one thing, you're one-dimensional, and to me, you're not going to survive as a trader. I think you have to have multiple tools in your arsenal to use different market environments, and again, all of it adding as odds enhancer. So even saying that you use volume as an odds enhancer does add an air of importance to you. It's not the end-all be-all, but it's one little piece that, okay, if I can steer those odds in my favor just a little bit, then that will give you much more confidence of these trades that I'm taking.
Yep.
All right. Well, if you guys have questions for Jeff, let me know. Send them on in here, and I will ask those questions away. I'm gonna give him a moment to discuss. Jeff is not an OTA instructor anymore. He works for the Market Institution, which I always gotta make sure I say that one right. It's been underneath his name, but you guys can see it here. The Market Institution. Tell us a little bit about what you've been doing.
Well, we in the month of July, we've invited everybody that wants to attend the live stream on YouTube. Every Friday, you can come right into our live trading room, kick the tires, and see if this is a style you like. Um, when I was an instructor over at Online Trading Academy, one of the courses that I put out there was training the eyes, and it was one of the most popular courses as far as the numbers. And I think people really got into looking at how supply and demand was created and what that picture looked like on the price chart. I now have that recorded. I just got back from Bali a couple of weeks ago, where we did the 3-camera shoot. I was sweating like a dog out there, but it was we did all the recording, a professional recording, and it turned out really wonderful. So I don't teach that class anymore. It's available on recording. We do have Mastering the Charts Part 2, which takes you a deeper dive into the structures of demand and supply. And we're talking about where the accumulation of orders are below a support or above a resistance area. That structure, that pattern, there's subtle variations, whether the peak is in the middle or over on the left, or over on the right. It gets into some very specific details of those price patterns. I kind of jump off since I'm doing my own thing, I can get as technical as I want as far as the pictures, but the students have to be able to replicate it. Okay. Yeah. So that's a big thing. We've had a lot of fun. I mean, we have a Discord room where basically when I'm done teaching for the day, I go hang out with the students. We talk about a lot of different things. We kind of snore together when the market's not doing anything. Fridays, we might be drinking Bloody Marys while we're doing it. We have a tremendous group of people and a lot of different backgrounds. And most of it is just people that are trading. Sometimes they just pop in and say, hey, what's going on? And we say, hey, we're watching this, we're watching that. Our community is a great place as well. So we have a lot of tools for people to get comfortable in trading, have a resource. I don't know. I'm pretty excited. Our team that's in my business partner, it lives in Bali with her husband, and she and that whole team is just absolutely amazing when it comes to support. If you need anything, just let us know. And the Discord room is open 24 hours a day. I usually frequent that when I'm in and out of the office, and it's just where we hang out and trade during the day. Primarily just trade futures. We do have some students that are really good at trading options, and they trade options, they trade stocks, and they post a lot in there too.
Nice. Well, you've got some raving fans in here as well. Good to say. Mick says, hasn't seen you since Thrive. Wow, we're going back. That was a great event. I wish we could replicate that one again. Thrive was such a fun time. And Lee, good to see you as well. Oh, I got a whole bunch. You got groupies in here today, Jeff. You got groupies.
All right.
All right. Well, for those that want, you can go visit themarketinstitution.com for more information, or as he mentioned on Fridays, go to his YouTube channel, which is The Market Institution as well. What time are your live sessions on YouTube?
They start at 9 a.m. Eastern.
Eastern. Okay.
You will usually see me in there. I start streaming, but I don't start the recording until 9 o'clock. But I'm usually in there if there's economic reports coming out. Of course, we want to be there to catch a little move. So, the official start time is 9 a.m. Eastern. We do about 90 minutes. And but you'll often see me in there about 45 minutes to a half hour earlier, just kind of setting up my day and putting things together.
And when do you start doing that?
This will be the whole month of July. Every Friday, it's available to anybody that wants to come in and see it.
Nice. I was going to say, you got this Friday, you got that core PCE price index number. That'd be a pretty exciting one to start with. But starting in July, guys.
Yeah, we'll be in the Discord room for that actually be in a live trading room for that this week. 2 days a week, we do have a community trading room where everybody has an open mic and can share their screens. It's really I guess my own little trading clubhouse, and everybody's welcome. But we always surround ourselves with successful traders and people that can trade live in front of you, and that's always important. Whether I've taken a lot of losses or stop outs on trades, and we've taken some really good winners. You got to see it live in order to believe it.
Yeah.
Does that make sense?
Yeah, absolutely. It's funny. I did a paid session in Las Vegas for the Traders Expo years back, and trading live in front of a room of well over 100 people can be a little nerve-wracking, right? Because the expectation is that you're going to they're all thinking you're going to make tons and tons of money. And I remember I did this. It was great. It was actually a really good lesson. So I'd walk through. It was kind of a flat day, not a lot going on. But I told the guys, look, if I have to, I'll force trades. But I made a few trades, and on each one I was like, look, my probability here is probably like maybe 55%. I don't really feel that comfortable, but I want, you guys paid to see money online, so I'm going to do that. And I ended up making, I think it was 3 trades total, ended up losing $100 total. And this one guy stands up and he gets all pissed off at me, and he starts shouting at the room, and he's like, I didn't come here to pay to see you lose money. And I'm like, then you're missing the point, sir. Because, there's going to be days where I lose money. And in this case, I have done exactly what I told you I was going to do. I traded, and I put myself in a position where I had my stop losses in place, ended up taking some small losses, and I'm done. Discipline is the key here, and me following my rules is the key. So your expectations of me, making $1,000 in 10 seconds is unreasonable. Beat it. Go to some other session that drove me nuts.
Well, you're always going to have those, but the students, they go, especially the people that are learning how to do this, the newer traders, they need to see that part of the trading. They need to see that, hey, we manage our risk by having a protective stop loss. We're not always going to get that A+ trade. I mean, we're still in the game because we do manage that risk. And once traders start to realize, even the really smart guys or the professional traders, they still lose money. Okay.
Yep.
But they lose little and win big.
In the live sessions when I was starting up, I came into it with the same idea as this guy that kind of ruined my session, which was I want to see people make a ton of money. But when I really watched the guys that today I idolize from that trading floor, it wasn't the money that they made that impressed me. It was their discipline to say, hey, I'm snapping the finger. I'm done. I'm out. That trade was bad. Move on. Yeah, I took some losses. Who cares? I'll come back tomorrow. That to me is what I use as a kind of the cornerstone for my trading philosophy is forget about the money. The money will take care of itself if you don't let it get away from you. So.
Exactly. And I think some of the stories I heard when you were first starting out is you were working for some private clients. So you had to have that very specific discipline or you lost everything.
Oh, I never, no, hold on. Let's make that clear. I never traded anybody's money. I never have any aspirations of it, but it was my money. I still had to have those discipline, but I didn't. The first 6 months or so, I was an absolute gunslinger. I felt like Billy the Kid walking into town and just shooting anything that moved, just.
Well, when that was happening, we were still trading in fractions.
Yes,
so
teenies.
Gunslinger, you could really do well.
I did do pretty well, but when you went from fractions to decimals in 2001 or 2000, man, that was brutal. That was real brutal. All right, Jeff. Well, hey, I'm going to wrap up here so I can get out of here. I didn't think we'd do an hour show today, but here we are at an hour show. I want to thank you very much for coming on. I appreciate it. Good to see you're doing well, and I wish you and the Market Institution well, and many viewers here that want to know any information, go to marketinstitution.com. I got the website up right there. As he said, for the month of July, he'll be live streaming his sessions on the Market Institution on YouTube. You can check that one out. That'll be Friday at 9 a.m. Eastern time, right? So 6 a.m. Pacific?
That's correct.
Oh, so basically get to walk right through the open with Jeff for the month of July to test out and see what he's all about. So thank you, Jeff. I appreciate it and taking your time on the program today. Best of luck to you, and I'll hopefully talk to you soon.
All right. Always great to see you, Merlin.
Right,
thank you.
All right.
Bye-bye.
All right, everybody, that was Jeff Manson. Let me apologize for my little mechanical errors earlier on. I was trying to do too many things over here, and I made some mistakes, which happens, so I apologize for that. But I see some old names that are familiar names. I saw Lee. I don't see you too often in here. Good to see you, Lee, and Mick as well. So I'm going to continue on and wrap this up here. obviously, Jeff, and we're going to talk more with the guests we have this week. So tomorrow I have Jerry Baldwin on the program, and I like to talk about different styles, different approaches, strategies. Jeff and Jerry are both futures traders, although I think Jeff does more broader trading in different asset classes. But we'll pick apart kind of two different styles here and see the differences and what are the nuances that make each one of them tick and things they're looking at. I know when we talk about Jeff's style, very pattern based, right? Looking at structure and form and shape and repetition. And that's where I resonate very closely with Jeff, because I'm a pattern person. I believe that the history will tell you everything you know about the future. Even when you're in uncharted territories like some of these markets are in all-time highs, you can still learn from that past. How did it operate last time it broke to all-time highs, etc. So always learn something along the way, and hopefully you guys like what Jeff had to say. Let's walk through real quick what happened for this market. Bitcoin still drifting down. This is the 1 hour time frame. Again, I don't think this is going to really turn around, even though it bounced yesterday. I still think we have ways to drift down. It would not surprise me to see us getting down to that 52,000 level before we stabilize and start to move forward here. Remember, there is a lot of Bitcoin coming to market. There is hundreds of thousands of Bitcoin going to be released in July, and I think July is going to be a fairly negative month. I hope we don't get below that 50,000 mark, but it could possibly happen simply because you have so many. Mick, I have issues with Eric Ochotnicki. Sorry. They had a personal problem with that guy. So there's just certain disrespect things that have happened over the years, so he won't be on here either. Unfortunately. Gold, you were down 0.76%. We talked about this pattern that's been holding really for the past 3 months, which has been almost a head and shoulders pattern. It feels like it's drifting lower, drifting lower, drifting lower. And I have this line across those lows on gold right now, which is 2,285 on your futures chart. Keep your eye on that one. I feel like this is kind of a magnet to it, like it's pulling it down right now and dragging us down towards that number. If we break that, then you've got some unfilled gaps and could potentially see a pretty sharp drop in gold, which would be great for me because I wouldn't mind buying some more gold. All right, Russell 2000 was down 0.22%. Technically, who cares? Really been just sideways for months now, so leave it alone. NASDAQ, we did have that little bounce today because of some of the tech names. And again, NVIDIA is really the thing that's holding up this entire market. You can make the argument that it's Microsoft, right? There's your Microsoft, which is still at all-time highs. But NVIDIA NVDA is what dragged this down the other day. Now we're seeing a nice little bounce up. A couple of days back, before it started this real steep drop, we talked about a 20% pullback potentially coming, and I marked that level down at 112. Well, we fell to a low price 2 days ago of 118. So getting close there. We'll see if we actually do get a deeper pullback here on NVIDIA. But it's just so beloved right now, I have a hard time believing it's going to really tank. So there you go with your NVIDIA. Moving up my list so I can wrap up here before a 1 hour show. S&P 500 just sideways for the past week and a half to 2 weeks after that big gap up on Thursday the 13th. Nothing to speak of here. What I would say is just put a box around the most area of contact, which is going to be right in here. I know you're like, why don't you include the tails? Because I'm seeing more points of contact with the bodies. So I will leave that right there. And that's your kind of zone we're stuck in with the S&P. Don't do anything until it gets out of there. Crude oil, 0.09%. We still, kind of tapping along that yellow box, which was overhead supply. It reacted to it for 1 day and then gave up, and now all of a sudden starting to move higher. So today's candle obviously showing weakness because you got long topping tail, small bottoming tail, and a really small real body. That's not a good sign for crude oil, but at least it's not tanking as we speak. Two major market movers would be the dollar index, which is starting to make me raise some eyebrows a little bit. We're coming back up into this area that it double topped in back in April 16th and on May 1st. To me, that's your next logical stopping point for this dollar trend that's happening right now. If that breaks, you're looking at 106.88, and then all of a sudden, it could be an off to the races type of situation, which would be very bad for our equity market. So keep your eye on the dollar index. I don't think we're at that pain point yet, but as we get above these highs from October of last year, October 3rd to be precise, then you have uncharted territories. You're really just a lot of room for it to run. All right, last piece here would be that 10-year bond. You had a yield spike today, but nothing right now in the overnight session, just kind of staying sideways. But the end of day number for the 10-year today, you had a gain of roughly 1.9% for the 10-year, but still for the past month and a half, fairly decent downtrend still intact until we break that 44.80 mark. Okay, that's going to do it for me. Mamon says Dixie Gap at like 106.51. Let's bring up that Dixie. Let's bring up that Dixie again. 106.51. Oh, this little guy right here. Yeah, I see that little unfilled gap. That really is kind of the beginning of my top overhead supply zone. Really, the overhead supply zone, the big one's about 107, but we'll see what happens. We got to get past these current levels right now. Michael, what time I got? I got 4 minutes. I got to wrap this up. You asked me about how I like Micron's earnings. I don't really care. I mean, I look at Micron. We talked about their impact on the markets today. Micron's down 7% in the after-hour session, which puts it down at 132. You know, if it were to get down to this 130 level, I might be interested in it, but I'm not really that interested in Micron Technologies, regardless of what their earnings are. And you see BB's earnings. BlackBerry, why do I care about BlackBerry? What has BlackBerry done? What are they doing? Look at this chart. I may as well play taps while I look at this chart. This is awful. No, I don't like BlackBerry at all. They could beat earnings all you want. And did they beat earnings today? They're supposed to lose 4.8 cents, and they lost only 3. Wow, they're doing so much better. They beat earnings by 37%. They're still losing money. They're hemorrhaging. I mean, have they had positive earnings? Oh, they did. Yeah, no, not interested. No, does anybody use BlackBerry? No, it's a software company. BB is dead. Leave it alone. Move on. Find something that's got an uptrend. Michael, you got to buy things in uptrends, not in downtrends. You're a catching a falling knife kind of guy. That's a recipe for disaster long term. So be careful with that one. All right, earnings for tomorrow. Nothing. Nike. Okay, you've got Nike. You have Walgreens Boots Alliance, which again is another atrocious chart. WBA. Let's go look at this one. You're probably going to ask me about this earnings announcement tomorrow, Michael. Look at Walgreens Boots Alliance. Buy it. Garbage. This thing's terrible. Terrible stock. I would not touch this one with a 10-foot pole. Oh, but it's going to come back up at some point. Yeah, well, maybe when it does, I'll be in it, but I ain't buying it now. No way. Economic calendar-wise, we do have some important announcements. We have a GDP number tomorrow, which I thought was interesting. Jeff made a comment that we've had 2 consecutive quarters of negative GDP growth. I don't see that, actually. We have positive GDP growth for the past 6 quarters, so all in all, we're okay on GDP. The number for tomorrow is expected to come out at 1.4% for the quarter, which would annualize to close to, it could put us up closer to the 4% here. Remember, the way it works is it's going to take the last 4 numbers here and drop off as we go. Okay, that's it. I want to wrap up before I go to an hour show. Again, I want to thank Jeff Manson for being our guest on the program today. If you have questions for Jerry Baldwin, who will be our guest tomorrow, it'll be futures as well. Again, knowing the differences between people's styles is a learning experience for all of us. So Jerry will be our guest. Not sure what we're going to discuss. If you want to steer that conversation, send me an email at TraderMerlin@gmail.com or put your questions down below the YouTube videos and I'll add them to our list here and get rolling on that. So thank you guys so much. We have a 59-minute show today. Cheers. I will see you tomorrow.